Hello and welcome. The previous trading day was highly volatile following the release of US inflation data. The US dollar gained value as expected. Later on, the euro-dollar pair reversed, hitting new weekly high, rising above 1.1491 and then returned to the lower levels. Yesterday, the focus of market participants was on US consumer prices. The consumer price index rose by 0.6% in January, driving up annual inflation by 7.5%. The indicators beat analysts' forecasts. This means that the Fed may well raise interest rates by 50 basis points as early as March. Most economists anticipate hiking interest rates 6 times this year and believe that the benchmark will reach 1% by July. Higher market expectations and interest rates are expected to support the greenback. In the short term, traders should be guided by technical indicators. As for fundamental factors, it's worth relying on market expectations rather than on final figures. Today's macroeconomic calendar is full of important releases from Britain, including GDP, industrial production, and data on activity in the services sector. The British economy is anticipated to shrink by 0.5% in December. UK industrial output is forecast to show a slight 0.1% increase. Besides, Germany will report data on consumer prices. Traders may also take notice of ECB board member Frank Alderson's speech. In the second half of the day, the United States is set to release the University of Michigan's Consumer Sentiment Index. If this indicator rises, demand for the dollar will increase. In this case, the US currency will be able to hit new local lows. From the technical point of view, I recommend focusing on the resistance and support levels at 1.1408 and 1.1363 respectively. Following a possible decline amid downbeat data on inflation in Germany, a false breakout at 1.1363 will create a buy signal. Thus, bulls will strive to regain control over the 1.1408 mark. In the event of subdued activity at 1.13863, long positions can be considered at 1.1336 amid a false breakout, or at 1.1307 on a rebound with a view to catching an intraday correction of 20-25 pips. If the price breaks through and consolidates above 1.1408, the volume of long positions will increase and the euro will have a chance of returning to 1.1448 and probably 1.1491. At the level of 1.1491, it will be possible to go short on the rebound, counting on an intraday correction of 20-25 pips. Short positions at 1.1408 can be considered only after a false breakout. In this case, the marks of 1.1363 and 1.1336 can be seen as targets. Alternatively, traders may sell the pair amid a false breakout at the level of 1.1448, the previous middle of the sideways range. Speaking of the British currency, market participants are awaiting data on GDP. Therefore, I think it would be a wise decision to buy the pair only in case of a false breakout at 1.3517 or in a rebound at 1.3477 with a view to catching an intraday correction of 25-30 pips. The aim of bulls will be to bring the 1.3558 mark back under control. If the price consolidates above this level, the pound sterling will most likely recover to 1.3599 in case of a false breakout at 1.3558. Traders will get a strong sell signal. Likewise, the volume of short positions will increase if the price fixes below 1.3517 amid negative statistics from the UK. Notably, the Bank of England had raised interest rates to contain rampant price pressures, while Britain's economy is suffering a sharp contraction. Thus, downbeat data on economic output may increase pressure on the pound sterling. A bottom-up test of 1.3517 could cause a bigger sell-off, dragging the pair down to 1.3477 and 1.3445. At the level of 34.45, it will be possible to go long positions on the rebound, counting on the intraday correction of 20-25 pips. Good luck and have a nice weekend.